Alright, for this video we want to have a look at a sample schedule 8812 for the child tax credit. And in this scenario we're looking at a married couple filing a joint return that have income that exceeds their filing thresholds for the year where the CTC starts to phase out. So we've got the 8812 here. It's part of the taxpayers joint form 1040. So we'll go through the 1040 and the 8812. And then I've got one slide here covering some background on the CTC and where these phase outs start to happen. So the credit for 2023 is $2,000 per child, and that's for children under the age of 17 at the end of the year. The additional child tax credit, the refundable piece, is currently at a maximum of $1,600. But this is pending a change in Congress right now. They're trying to get this increased to $1,800 per child. And then they're also trying to increase the refundable limits if you have more than one qualifying child. So the phase-outs increase. Now, as part of this act, the Bill 7024, there's not any changes that are being made to the modified AGI limit. So in other words, they're not increasing or decreasing modified AGI when it comes to the threshold. So those still remain at these numbers here, which are, if you are a married filing joint taxpayer, you're going to get full credit is going to be available to you so long as your AGI is under 400K. For single and head of household filers, it's under 200,000. So the total credit, if you start to go over these thresholds, you're reducing your CTC amount by $50 for every 1,000 your AGI exceeds those thresholds. Now, the way the math would work out here is if your income is $40,000 or more over that threshold, the credit's eliminated completely. So if you're a married filing joint and your AGI is $440,000 or more, you get no child tax credit. But if you're within $400 and $440, then you get something, it's just phased out. So let's look at our fact pattern here, and then we'll take a look at their 1040 and the 8812. So we have Jane taxpayer and Adam taxpayer married filing a joint return for the year, and they have two children that are under 16 years of age at the end of 2023. So let's say they're age 8 and 9. Jane works full-time as an executive, and her W-2 wages show $230,000 for the year. And for Adam, his W-2 wages show $179,500. Now, their total combined wages on the 1040 are going to be the $409,500 figure, and they've also got some investment income here. So their total AGI for the period is going to be $415,151. Now, given that their AGI as married filing joint exceeds that $400,000 threshold, they have to calculate a phase out for the child tax credit. All right, and so that's what we're going to look at here with their tax return. So we've got Jane and Adam's Form 1040. They are married filing joint, and they've listed their two dependents here, Alex and Brian, and they've checked that they are qualifying children for purposes of the child tax credit. Now we can see they've got their earned income, their wages up here, $409,500. Their interest income and their dividends. So their total AGI is $415,151. After taking their standard deduction, their taxable income is $387,451, and so their total tax on that taxable income is $81,147. Now, because they have taxable income and they have some tax on line 18, they can claim the child tax credit, right? That's two of the requirements, is that you have some taxable income and you have some tax. Now, when we look at the 8812 and complete part 1, this is where we start to figure out how much of the credit is initially available and then how much we need to reduce it by because of those phase outs. So in part 1, we've got the top line item here is their AGI from line 11, so $415,151. They have two qualifying children, so $4,000 of child tax credit is initially available. Now on line 9, their filing status as married filing joint is $400,000, and then line 10 we calculate the amount that we're using as the baseline for the phase out. So you subtract line 9 from line 3, So subtract 400,000 from line 3, which is 415,151. So we have a difference of $15,151, right? So if we take 415,151 minus 400K, so we have the 15,151 there. But per the instructions, it asks us to round up, right? So we have to express the amount on line 10 as a multiple of 1,000. Right, so for example, if you have 425, you round up to 1,000. If the result is 1,025, round up to 2,000. So because we have 15,151, we would just round up to 16K. So we have $16,000 reported on line 10. Multiply line 10 by 5%. So 16K times 5% gives us $800. This is the amount of the reduction to our child tax credit up here. So line 12 asks, is the amount on line 8 more than the amount on line 11? And the answer is yes, right? 4,000 is more than 800. So we subtract the 2, subtract line 11 from line 8, and then enter the result, which is $3,200. And then carry that over to the the credit limit worksheet. So $3,200 is now the reduced amount of the maximum credit that we could potentially claim. So now we have to look at the credit limit worksheet to ensure that we have enough tax. Well, in their case, they're certainly going to have enough tax, right? So the amount of tax from line 18, so that's page 2 of the 1040, 81,147. And so because we have 81,000 plus of taxes available, we're able to claim the full amount of the $3,200 in credit, right? Right. Line 14 asks, enter the smaller of line 12 or line 13, right? So the smaller amount is going to be the credit. So $3,200 is our child tax credit. That's reported on page 2, line 19. So 19 CTC amount for $3,200. So when we look at their tax reconciliation here, their total taxes were $81,147. They get a reduction of $3,200. So it brings their net balance before all those other taxes of $77,947. So all in all, the $4,000 in child tax credit, not all of it was available to the taxpayers based on these income amounts. They had to reduce it by the $800, but they still got a child tax credit for $3,200. Now, the last item to ask about is always the additional child tax credit. So anytime you don't use all of your CTC, you can come look at this section here. But in this claim, we don't have any excess because if you look at the page 1, it asks us, subtract line 14 from line 12. So we look at 14 and lines 12. If we subtract those two, we get 0. So if 0, stop here. You cannot take any additional child tax credit. So skip parts 2A and 2B. Right, and that makes sense, right? I mean, we had $3,200 available. We used all of it as a non-refundable credit. So now that we have nothing left to claim, there's no ACTC amount, which would be reported generally here, right, on line 28. So for taxpayers that have both the child tax credit and the additional child tax credit, you'd see an amount on line 28. But in their fact pattern here, they don't get the ACTC because they've already used up to $3,200 there. All right, so that covers it for this tutorial. I hope that was helpful. The takeaway here is, of course, just a reminder that this child tax credit is generally available to most taxpayers, right? You would have to make quite a bit of income in order to be phased out completely. So in this case, the taxpayers did get some of the benefit, not all of it, but $3,200 is still a decent chunk of money. So thanks for watching, and as always, I look forward to seeing you again on the next video. Thanks.